Hello and welcome to Bunnex Investment Group. Today we are going to talk about a very important topic, which is drawing levels properly to predict the market correctly. But before we jump into the video, be sure to hit that subscribe button and that notification bell icon so that you'll be notified each and every time that I upload a new video. So I am going to be using Japanese yen. It's actually a pair of British pound against the yen. I actually once discussed about this topic in my previous videos, but by public demand, people have requested it to have a repeat of this one. So as I said earlier on, I said the first thing is to go on the higher time frame. That is where you will see the previous peak, and from that previous peak, that is where you will draw your levels. So I usually love to start at the daily time frame, which is this one. As you can see, from the daily time frame, we had this was the first peak, then from that peak we had another one here, from that one another one here, from that one to there, then from this point to this point. So these are our points of interest. These are where we will start to count levels from. But for the sake of giving you a tutorial, we are not going to start from this point, otherwise this video will be an hour or two long. So our main point of interest, I'll start from this one, illustrating how you draw the levels. So this is the first step of in marking up your levels. The first step is to identify the turning points or the previous peaks using a higher time frame of your choice. You may love to use the H4, and this is how it looks on H4. But I usually use the daily time frame because it is a more clearer time frame, and it gives me the overall direction of that pair. So going to H4, this is how it looks on that previous peak from the daily time frame. So our time frame of interest is the H1. So as I said earlier on, that an H1 level is equivalent to a day of drop. However, it is not always the case that on each and every day of drop, that length will be equal to a level. So to remove that subjectivity, we use the M15 time frame, where if we see 3 segments of the M15 time frame, we'll deem that as a complete H1 level. So I'm now going to the H1 time frame. Right, from this point, as you can see, that from this point to this point, we actually had a push, a pullback, another push, and another pullback, meaning that this length from this point up to this point is actually a complete H1 level. So if that is a complete H1 level, this will actually tell us that we are now expecting a pullback or a consolidation before we go to the second level. From this point, we can see that there was a pullback and consolidation, and from that pullback and consolidation we also had 3 pushes where we had 1 a pullback, 2, and the last one 3, meaning that our H2 our second level was complete from this point to that point. As I said, whenever a level is complete, we expect a pullback or a consolidation. From this point, we had a consolidation phase where price kept on ranging within the same region. So now during the third level, this was actually a consolidation phase. 1, 2 up to this point. And here are our 3 levels of drop. Right. After having 3 levels of drop or 3 levels of rise, the most powerful setup on that point is the multi-session W or the multi-session M. We will have to look for the multi-session W after in this particular situation. We now need multi-session W to enter a long trade. From this point, we can actually see that the market bounced when it reached this point, but it did not issue our anticipated second leg at that instance, but it actually did that after several days. That is when it came back to the same level. Within these days, that is where we were supposed to enter our trade and restart the count. So restarting the count, from this point, we actually had our first level, second level, and our third level, which came after some days of consolidation. As you can see, this day and that day were a period of consolidation, and from that point, our point of entry was going to be determined after having a multi-session M, which was not issued in this instance. So you may be probably asking yourself that do we always draw levels 3 levels up or 3 levels down? We do not draw levels 3 levels up, 3 levels down. If we do so, the market will be actually flat. However, from the higher time frame, that is where we will determine the long-term trend. And as you can see, on the long time or on the higher time frame, we are actually going up like this. So when we are going up, it means we are looking for reset points within the lower time frames. Let's go back to the lower time frame, to the H1 time frame. If you visit my previous videos, I actually did a video on resets, and I discussed about resets and defined it as a new point of trend continuation. And resets actually occurs at our Fibonacci retracement levels. If we are having the first set of threes, our reset occurs at 68.1. On the second set, our resets occurs at 38% of the Fibonacci retracement level 2. So this is what I mean. This was actually a second set. As you can see, we had our first set. This retracement point was at 61.8, I mean. Then this was our second set. Then a retracement point. Within this structure, our resets were going to be at 38.2. If you do not understand very well where to expect resets, please go back and refer to the Market Maker course on this channel. It is well explained and you actually understand what I mean. So after drawing these levels, it means this one was a reset. We had a reset at this point, and the count restart again. So restarting the count, we had the first level, right? After having the first level, we had price pullback, and after price pulled back, we had a moment of consolidation, several days of consolidation, and our second level actually initiated from this point to this point. Then our last level was now at this point to there. So this is actually the point where the price is currently at. And as I said earlier, that after every 3 levels, we look for a multi-session M or multi-session W. This is actually the setup that we are looking for, right? Right, this is the setup that we are looking for. And if you have missed this one, you can actually wait for a pullback of price before going into level 2 and enter at this point. So the main thing that this video is all about is to see how to deem an H1 level complete. So the answer to that question is an H1 level is deemed complete after seeing 3 pushes on the M15 time frame. As you can see, this level started from this point. We had vector candles, and this one was actually a red candle. Then from that red candle, we had another series of vector candles. Then we had a consolidation. Then our levels was our H1 level was complete. So you have to see these first before deeming an H1 level complete. As you can see, this one, one, two, three. Right, this one was actually a bigger one. 1, 2, 3. This one, 1, 2, 3. So the first thing you must see 3 pushes on the M15 to deem that H1 level complete. If you do that, you will see that drawing levels will become an easy task for you. Thank you for watching. Please check out our free signals Telegram channel, and the link is actually below in the description.